Good morning, everyone. Good afternoon and good night, depending on which part of the world you are in. And welcome to Tuesday Q&A class. Today, we're going to be taking a look at what is a fair value gap, because yesterday we had a question about that, and I think it's worth taking the chance to go over the basic concepts. Nonetheless, we're not going to be jumping in like really in depth on the fair value gap theory, because you're gonna have a ton of videos about that in YouTube, but we're gonna be understanding the basis of it so you can also understand the indicators that we have for you there. And also Thomas Spain, what is up, brother, and welcome to the show today. So just my luck. what happened, brother? All right, Thomas, we're also gonna get started after the fair value gap thing. We're gonna do a base setup, right? Just I do understand that you're coming back on board, talking about fair value gap all day. Oh, don't worry, it's just a basic concept. I mean, I'm very sure that what you already were talking about, it is much more complex, right? But what we're going to be looking at today, and let me know if you would like that, it's just a basic overview on how to add the new indicators and where everything is located, just so maybe you and other members could be finding themselves around. Let me know if that would be something that you would like to. And also, guys, we had a ton of alerts ringing: ICP, WU, PITE, SMIC, OP, and BTC. And also IMX. So guys, it has been a beautiful day yesterday and today in the morning. Also, guys, if you are missing out on the Piper Academy, please go check it out. Today Army Piper was able to join. He's on vacations, and also he's taking that extra time to jump back into his show. So let me see if I can share that link here with you guys. Give me just 1 second so you can go check it out, because we talked about a possible retracement and also something important. Hey, CTS, absolutely. Thank you for that, brother. All right, so we're gonna be waiting for CTS to drop that link so you guys can go and check it out. There we go. So look at that. The SEC telling BlackRock what to do for once, right? For once. But yeah, I mean, seems like that might not be a very good thing to happen. I mean, I also had my conspiracy theory that I shared there, so go check it out after the class. Also, for the new members, if you are feeling kind of like not understanding what we're talking about and stuff, just take some notes on important things and then go over the extra education that we have for you guys and look at the class recordings. But first of all, take a look at the important classes and then also video number 3. So let me just point out for here, extra education or additional education. Let me see. Yeah, additional content. Here we go. This is where you guys, they just click it and go check out after this class, the important classes video number 3, and then the class recordings. This weekend I'll be uploading all of this week's content. I've been recording it, so you have also something to watch. Also, guys, we're not gonna be taking any vacations. So if you are for a Christmas special, stay tuned on Piper Academy, and also stay tuned right here on Chart Prime, because we're gonna be following the Bitcoin price as it moves and as we ring on to the New Year's. So guys, without further ado, let's go to the charts. Perfect, Aaron. Awesome. All right, so let's get started first with WU. All right, so we have the alerts ringing. Remember that I was expecting 2 things to happen. All right, the first thing was the breakout of the section, which happened in here. All right, that's why we were looking at this upwards movement. All right, then the next alert, remember that it was right on this line in here. As we were breaking, look at like how close we were there. So let's see, as we were breaking, look at how far we were from the top. So guys, should I have held my long or should I have closed it? By the way, this section I took 50% out. All right, why? Because there is always a chance that I could be reversing like here. All right, so just so you know. But remember that I was talking, especially Aaron, it was with you this chat, right? Held and move stop loss. Great. Awesome, buddy. So great to know that. So you are in much more profits now, right? Let me know. Perfect, perfect. Buddy, thumbs up for you. Shout out for Aaron there, making some big profits. Happy New Year and Happy Christmas. Merry Christmas. All right, so let's keep working on that, Aaron, because I want to hear also your success story for this upcoming year. All right, so we had enough space here to keep climbing up. All right, so we weren't having any oversold. We still had some momentum going on there above the zero line, still bullish, breaking the resistance. I mean, what else could have gone wrong? All right, well then, a ton of stuff, but nothing that important at the moment. All right, so then remember that we had a reference here. All right, remember that reference. There were two kind of movements there, either bouncing from it and going for the retest and off we go, or breaking it, going for the retest and off we go. So basically like this. All right, so guys, now we see the results. I am taking my second 50% out. And just so you know, guys, let me show you graphically when am I talking about 50%. All right, let's figure out that this is my whole trade. This is the 100% of my position. All right, of the trade side. Let's just imagine that this is $100. All right, this is $100. When I take TP number one, I take 50% out. Guys, how much is that in dollars? Just as a reference, of course. Let me know. 50% out of 100, it is, what is it? Perfect. Yes, $50. So I take out $50. Perfect. Yes, guys. So guys, also remember, especially for the new members, I'm trying to get you to talking here because the more you talk, remember, the more points you earn, and the more points you earn, you can be exchanging those for free TradingView coins, which will be allowing you maybe to upgrade your TradingView account or just save for the next upcoming renewal or whatever you want to do with those coins, right? It's just free stuff that we're giving away. So just give it a shot, even if you don't know the answer. So $50 plus profits are just 50 you put in from entry. Now I put 100 for entry. My whole position is 100. All right. Does that answer your question or your question, Mario? Okay. If I hit TP number one, I take 50% out, which is, oh yeah, perfect. All right. 50% out, which is equal to $50 in this example case. All right. Does that answer your question? Let me know. Perfect. All right. Then when I hit TP number two, I take 50% out. That is of what I have left. So what is 50% of my new hold trade? Exactly 25% of the global trade, or $25, because my global trade was previously 100. All right. And then my trailing, usually I ended up being with the last 25% there. All right. So I also could be looking at something different, like for example, saying, all right, instead of trading it, I could be taking another 50% out, right? I don't usually do that because I end up like finding that if I trail it and it goes back down, well, then that's a new opportunity to either a head switch or re-enter with a full position for the next climbing step, right? So that is just why I don't usually do another 50% out, all right? And also that depends on your size of your entry. Remember, I only entry with 3% of my wallet, all right? So that is 100% of one entry. 3% of my whole wallet, it is my 100% trade. And then I start taking out money there. Does that make sense? What's the best result you have had leaving that? It's been very good, but I mean, I don't really recall that because I usually re-add to my position. Let me show you. It wasn't Bitcoin though. Was it? I don't know. Maybe also was, you know what, on maybe Atom. I do remember Atom also being a very good one playing out that game. Yeah, but let's take a look at Atom here after this one, after this example, and then we'll see what do I mean with adding to my position. But yeah, I mean, I've even had another kind of like 100 and 200x just by holding that 25%. But those usually goes for lower cap coins, right? Although I usually do re-add to my position when I find it that pullback, right? So, and then I find a continuation of the trend like this. Like for example, let's just say that TP number 1 was here, TP number 2 was here. It trailed all the way down. And then when I see maybe a possible reversal, all right, and then I see it keep going up, and I see a confirmation of a bearish divergence, well then I do re-adding here and then take out as much as I can back in here, and I just keep doing it over and over. So does that make sense? Also remember that I do macro analysis on daily and then my usual 4-hour analysis on 4 hours, right? So depending on what I see, it's how I'm gonna be trading that trade specifically, because not always gonna be exactly the same. What's going to be always exactly the same, or most of the times exactly the same, it's going to be entry, early profits with 50% out, and that's it, right? Everything else will be susceptible to changes. Perfect. Let's see, what amount you re-add? That depends. In normal cases, sometimes I add whatever I took out. So I have another 100% trade to jump in. So no more, yeah, exactly, never over 3%. Why? Because I'm willing to take up to 6 trades. And if I start adding 3, or even higher than the 3%, that'll be cutting out on the possibilities of grabbing other coins, right? So remember, rule number 1 of investing, and this is not financial advice, it is, distributing your portfolio or diversifying your portfolio, just so you diversify the risk over, instead of one asset, to multiple assets, right? And also you want to start looking at assets that might be both having different fundamentals, but both going to the same way. Also remember that it's for holding scenarios, because if you are trading or even hedging it, well then also just apply that on smaller scale. Like for example, if I look for entering this trade, I will also be looking for a possible short scenario, right? I will not be forcing my hand to enter a short, but I'll be looking for one of those coins that are looking very good for shorting, and also entering for a short as I approximate to the best case scenario area. So what platform do you use to trade? I cannot talk about this right here because we're not associated with any, but I do trade. I would not be recommending, all right? Just so you know, I can talk about it, but I won't be recommended. I do use multiple trading sections. Right now, my most important, which I'm migrating off of it, it's Binance, all right? Then I was migrating to Bybit, and then from Bybit, I migrated to BitGet. Now, as we stand, my trading platform number 1, it's Binance, then moving to BitGet, and then also now I'm moving a little bit into Mexi. But other than that, remember, this is not financial advice. What am I doing here? Sorry for that. Give me just one second. Yep. So guys, it's just like, in real life, I also do the same thing. And again, not financial advice, all right? But and we talked about this, I believe, almost 1 year ago. I'm going to be re-uploading that video because I believe that is an important video. What I talked about the financial tools that I personally have on hand, all right? So we talked about, and this is, remember, we are not associated with any of those, and I do not recommend them. I'm just gonna be telling you what I do, and whenever I feel like I should be getting out of there, my loyalty is not with the companies, right? It's not with those entities. It's with my own money, all right? So I'll be loyal to my wallet. I'll be loyal to my money, which means if I start feeling like I'm feeling right now with Binance, and it's not right now, but since a little long ago that Binance has not been so transparent, all right, that's why I started migrating my money somewhere else, all right. So far, Binance for me has given me the most flexibility because I did enter almost since they opened up. I closed or I put my accounts on hold when they had the hack, like a freaking long time ago. I was not affected by that hack, thanks God. Exactly, loyal to your wallet, exactly. Thank you, brother. Yes, absolutely. Because remember, crypto, it's kind of like a freedom, all right? Freedom money, No one else. Once you send that money, who are you going to be going to complain to if you get scammed? Nobody, right? Because freedom comes with responsibility, and we need to be responsible. And being responsible also seems to be like not trusting anyone at all, right? And also looking after yourself because no one else is going to. And since I learned that on Bitcoin, and again, this is not financial advice, I've been applying it to my own finances, all right? And I'm gonna be making a little parenthesis in here. I'm gonna be diving in this because this could be a good step forward for you guys. Again, this is not financial advice, but maybe by me sharing my own experiences, all right? What I did correct, what I did wrong, and what I believe I could have done better, all right? Maybe you are on those early stages and you can take the appropriate, all right, actions for your wallet and for your own situation, right? Based on your personal situation and timing, all right? So again, not financial advice, but since I learned that crypto, it's freedom money, which comes with responsibilities, I've taken that same responsibility with myself, all right? So one of those responsibilities that I do is when I try to spend money or handle money, like for example, out in a trip or something like that, I do credit. Why? Because credit comes with an insurance, all right? If I get hacked, if I lost it, if I get cloned, something like that, that money is insured, all right? The other way around, when I use debit, that money is not insured unless I pay for that insured money, all right? Remember that in different parts of the world, their rules change, all right? So just so you know. Also, what am I gonna be doing with my money? Well, the first thing that I look for, it's kind of like a massive blob of money, all right? That is what's gonna be my cushion for the rest of my life, which is my savings, all right? Also, let me see, since I trade stocks, I have my broker directly linked to TradingView and can trade directly from charts. Love it. I still don't do that because it has a little bit of a delay. And also, I don't know, I feel that I have a little more control over my brokers. But that's me. That's me. Again, if you like this one better, because I've been trying to kind of like get used to connecting my broker, but I still feel that, and this is for me, all right? I still feel that that might not be the safest way to do it on my side, right? Especially since I go live, maybe, I don't know, maybe a vulnerability gets found, and I don't know, I'm just not willing to risk what's going to be the savings for the rest of my life, right? So that's what Money Stash. Yeah, many pirates out there. Yes, absolutely. OC, Yacht, Money Stash. Hopefully. So, all right, going back into that. All right, I do leverage credit versus debit. All right. And then another thing that I do is like, what do I do with my debit? I divide that cash or that money that I have in multiple instances, all right? One goes for like, I'm gonna be adding to that blob of money, all right, to make it a greater blob, all right? But that greater blob should be making me money. I understand that I cannot make that much money off not working money, but I'm willing to go after the entity that give me the most amount of money, not falling into a scam, all right? How do I taste the waters? Well, then, let's talk about a couple of things that I have going on here. And I'm going to be revealing, we'll see, let me see. I'm going to be revealing a couple of things in here, if I can, all right? So, yes, I believe I can, all right. This is one of the things I use, all right? This is not a bank. This is another different financial entity, right? This is called Fondeadora. Again, we're not associated. I'm not recommending it. This is not financial advice, all right? So Fondeadora give me kind of like a tool there, which allows me to earn up to 12% annual yield if I separate that money. All right, so I'm willing to take part of that blob and put it, let me see, yeah, in here. I'm trying not to show any important things, all right? So that's what I'm trying to do. But that is not the only thing that I do. In fact, where most of my money is, and I'm talking about fiat, all right, fiat. Most of my money is, my fiat money, it is on insured entities in Mexico, just like in the States, and I believe also in Europe or most parts of Europe. we have up to a financial organism that regulate this kind of like financial tools, all right, or financial entities, which secure them up to a certain degree on your money. So I try never to go above that insured money. So if they go bankruptcy, I'm sure that the government is gonna pay me back that money. All right. So that's another thing. Another thing that I use is like, for example, the Dollar app. All right, the Dollar app, and again, we are not associated with that, and I'm not recommending it. But the Dollar app allows me to have up to 4% cashback on using directly USDC and spending it on either Mexican pesos or US dollars. Also, I can choose to spend on some other currencies. So that is giving me 1 extra percent of comparison to my other debit or credit cards, all right? And then I also use Lend or Ledden. I'm not pretty sure how is it pronounced, right? That gives me 3% annual yield over Bitcoin and also give me a higher yield over USDC. All right. So another one important part I like about Lend, they are Canadian and they have been proved by fire, especially when 3 Hour Capital, when bankruptcy, when we started have everything like going wrong, they stood up strong and basically went very, very, very transparent with all of their practices. That's why they earned my trust. But again, my trust is not the same as my loyalty, right? Guys, remember, what am I loyal to? PayPal also has MasterCard, and I will be used to buy these things with only the exchange amount. The thing with PayPal, and I do see your point, MGSG. The thing with PayPal that if you're trying to buy crypto, it's kind of like a walled garden. You cannot use that crypto freely, right? And also, from my experience using PayPal, damn, those fees, they're just killing me, right? I mean, whatever I can make out of that passive income, I'm losing more in fees on transactional movements. So yeah, can you type out the names of the services just you mentioned? Dennis, I don't know, brother, because I don't want to feel like, I'm pushing this to you guys, right? I'll do a little, let me just consult what I can do, right? Just to keep you guys safe, right? I just don't want to throw things out there, right? And also, like, seems that we are suggesting something, all right? Just for research purpose. All right, for research purposes, and let me do that there. So let's see, research for purposes. All right, just 1 second. So I use Lend or Ledden, all right? I also use the built-in tools from Binance and also from BitGet, all right? Just so you know. So Binance and BitGet, all right? I also use the Dollar app, 4% cashback. CB, I'm gonna be placing CB. I also use Fundadora for 12% annual, annual return yield, APY. And let me see, I do use another one, but I don't quite remember the name. Let me see if I have it on hand here. Which other one? I do have it here. Give me 1 second and I'll give it to you here. Where is it? Oh yeah, of course. And then I use Nubank also. So Nubank, that also give me passive income on my debit. So there you go. Those are the ones that I'm currently using in Mexico as residents of Mexico, right? Yours, guys, should be different and most likely will be different. The best thing that you could be doing, again, not financial advice, is looking who is giving you the best annual fees. And as soon as they drop it, just take your money out. And again, not financial advice, all right? Not financial advice. Why? Because I'm trying to maximize how much can I get in return out of those entities, all right? And also be very, very careful on where you put your money, all right? Again, every single time that I tried a new institution, I wait since the very first time that they started. I let other people do it, wait for them to fix their bugs. Also see their how good are they doing based also on the government institutions. See if they are backed up by the government institutions. See if they are also insured by the government, and if they pass satisfactory, I mean good enough, right? For me, then I'll try to put a little bit of money. All right. Most of my money is on cold storage, so wallets. All right. Most of my money is also in Bitcoin, just so you know. And I'm not telling you to put your money on Bitcoin. All right. I'm just telling you what I'm doing. So do not, and I mean, for the record, do not do what I do. All right. Just take your own analysis and do what's the best for you. All right. But having said that, remember, guys, that you are responsible for your own money and for your own decisions. Try to take the best that you can do with your money, all right? And get low risk, higher yield, all right, as possible. Let's see, what is the dollar app? Is that on Android? Yes, it's on Android. And let me see. Oh yeah. My wallet. I don't have my wallet. My fiance uses my wallet. So yeah, I cannot show you that one. Let me see if I have it on my cell phone. All right, maybe I can do this. No, let's see. Oh, come on, can I? Oh, I cannot. That is a dollar app. Dollar app. It has a little green circle icon. Again, not associated with them. I'm not recommending them. All right. Yeah, and just for research purposes, I'm showing this, all right? So again, once again, be careful, guys. Hey, OC, can we use VET as an example for fair value gap? Yeah, sure, VET. So let's go for VET. So let's go for, and take a look at VET. All right, let's jump in VET. Take a look at it. All right, so what is a fair value gap? Again, this is going to be just a basic example, all right? A fair value gap, it's basically a big discrepancy with a big candle. You always see me saying it's not about the breakout, it's about the retest, all right? Usually those fair value gap happen at some support or resistance zones, right? Where I like the most when they happen, it's on throughout that dynamic reactor. Why? Because that is a very obvious zone where we have volume, right? So I'm mixing the smart money concepts with what we already know, all right? So basically, we'll see a little range, all right, where we have fair value, and then another range where we have that fair value and we see a big movement, all right? Usually when we have that big movement, we have a retracement to the 50% of that movement. And that, my friend, is the fair value gap. All right. So does that make sense? Like, for example, in here, you'll see this big movement and then half of that is going to be here. But as you can see, if we add these two more candles, basically going to daily, all right, we're going to be seeing that we could be adjusting this mid zone somewhere around there, most likely going to that dynamic reactor. That's why I use the dynamic reactor within that fair value gap concept, all right? So let's take a look at what has happened in here and also what I could be seeing. So I do see a little range, all right? And by the way, this is a great example of a Wyckoff fake out. Look at that fake out going back in, and look at this, 1, 2, 3 candles, all right? Basically being almost at the same size. And if I go to somewhere like daily, let's go to daily, we'll see that this is, my friend, a big candle, all right? Let's go back to the 4 hour. So on the 4 hour, let's see what could that fair value gap be. I'll be calling it the half of 50% of that movement, all right? Remember that depending on your time frame, your fair value gap will be varying. I like to be on the 4 hour and looking for bigger fair value gaps. Why? Because I have a little bit more definition, all right, or a little bit more information by dividing that fair value gap between a couple of candles and then going for that 50% retracement, all right? So based on this as a daily or even a 6 or 12 hour, let's take a look at, 12 hour fair value gap, I could be looking at two different supports, all right? 50% of that gap or that bar, that big bar in here, all right? 50% of the movement, that's where I could be going for the retest, all right? Or I could be looking at a Wyckoff breakout, which is gonna be, look at that, also very close, but a little bit above, all right? So those are my two takes. Remember, this is not only fair value gap, but I'm also trying to give you a practical way by adding a little bit more knowledge that we already have. So that way you can see, just not by looking at what is a fair value gap and just acting on it, but using the confluence on your knowledge to add that confluence on the chart and therefore having a way better reaction. Can you review MVP oscillator and how to use it? Yes, after this section. Let's take a look at then a fair value gap on the 12 hours. So already have gone through this one. Let me remove everything that I have here and then going for that. So let's do a fair value gap analysis in here. All right, so, oh, it was supposed to be that one. Let me see, order block. All right, this is not it. Well, let's add it in here. So let's turn off everything here just for good reference, also even predictive ranges, and then start adding our fair value gap, all right? Remember that you can fine tune your fair value gap and also give it a timestamp of color. Usually, depending on how you're looking stuff, you could be configuring these kinds of colors. Let me ask you one thing, and this is a tricky question, guys, all right? Why? Because I'm gonna be showing you a different perspective, but depending on what you do. Hey, hola, what is up? Crypto Viking, what's up, brother? Bienvenido, bienvenido. Y qué bueno que te tenemos de regreso, Crypto Viking. So let's add that fair value gap and see that we have green and red, all right? Or greenish and reddish, all right? So, because I'm saying that because we have asked, all right, what is the bullish color and what is the bearish color? That depends on what or how you're looking at it, all right? So let's take a look at that. Remember that fair value gap that I was analyzing before? That big candle? How be darn, look at that. Where is the center of that fair value gap, all right? Basically the same zone of a manual zone, all right? I mean, you cannot make this up. I just requested for Thomas Spain. So as you can see, that happening here, all right? So let's see how it appears somewhere around here. Here we go. How can we see if that fair value gap is acting? Also, you can see that when it formed, and then the grayscale in here showing you how we went back in here and even a tiny bit past that 50% zone, all right? So the same thing happened here, but at this point we went very, very short, or like very close but short to that 50% line. All right, do you see now how does that fair value gap it's working? Let me know, Thomas. And also if anybody else have a question related, let me know right now so we can then move forward in here. Yeah, yeah, look at this. And I'm gonna show it to you like again, once again, just so we can see it way better. I'm gonna be making this one smaller and huge. All right, so we have that fair value gap, all right? That big candle, all right? And after that big candle, we are supposed to measure that fair value gap and also look for the 50%, all right? Look at the gray area here. This gray area happens to be exactly that wick size. Does that make sense? Because that is the retracement that we are going for. And sorry, but what is the outcome? Does it grab liquidity? We'll talk about that in a second. So far, it's just a concept, all right? It's just a concept. And we need to manage this so far as a concept because we're gonna be seeing the two faces of it, all right? But yeah, fair value gap, first of all, it is the area of that gap, all right? Of that body of the candle. And then we're looking for that 50% as the possible retracement and support of the next movement. So a continuation of a movement. So far, so good? Let me know. Perfect. All right, perfect. And I believe that I kind of like responded to your question, didn't I? I mean, kind of, not fully, but I believe that I'm perfect. Yeah. All right. So yes, it's like I push like to continuation of the trend. Yep. Now, let's see that this gray area, it's again, very strangely, the same size of this wick. So, do we see a pattern here? Like, as the wicks goes in, we're gonna be drawing that gray area on top of that fair value gap area. Does that make sense? So we draw the green, and then as we have something else, we're drawing on top of it with that gray area, which is the retracement that we are expecting, all right? So why do we show you that percentage? Remember what is the DNA or the fingerprint analysis, all right? Guys, especially Thomas, you should be remembering this, right? You are a veteran. So guys, help me out in here, especially veterans, to let me know what is the fingerprint or the DNA analysis of an asset. If you don't know, give it a shot. Remember, you're earning points there just by typing. Grab liquidity, some sort. I mean, it's on spot, but this is not exactly what I'm looking for. But yeah, it's the DNA. Yeah, it's the DNA. Yeah, I mean, we'll explain more on that. But yeah, wasn't there for that? I don't quite remember that one. I don't understand what you mean, Dennis. The common wicks length. That is what you're referring digital. It is the volatility calculation that I do for stop loss. But yeah, let's do a quick reminder. The DNA of an asset, it is basically what it's made for, all right? So when we look at DNA on real human beings, we can start predicting like, all right, this guy based on his DNA is gonna have maybe this pathology, right? Or maybe he's gonna have blue eyes or brown eyes or green eyes, right? And because of this genetics, he's more likely to commit or to do these mistakes, all right, and this good actions. Does that make sense? It is also very, what is it? Exactly, there you go. Yeah, perfect. So it is the patterns that we can consistently look for, all right, in the asset. So let's do a quick DNA analysis. Remember, the DNA analysis that we do is on the three stages of the trend, all right? First stage is upranging, what it does when it's upranging, all right? Also remember, upranging, it includes what it does when it finishes upranging or going up, all right? Then just flat ranging, what characteristics does it have if it's just ranging? Is it ranging downwards? Look like this. I mean, look at this. It seems like, for example, it likes like V-chain, it likes to downrange, all right? So that is one of those DNA analysis. We're seeing that pattern repeating over and over and over, right? What is another thing that we'll see in here? We see that it likes to do those volatility wicks, right? It likes to do those, guys, do you remember how I call those wicks? Absorption zones, right? So it likes to have those absorption zones both at the top and at the bottom, all right? At the bottom and again at the top, all right? Look at those absorption zones. So we can see it repeating over and over and over, right? Usually those absorption zones comes right after a blow off top, all right? So look at that. Blow off top and a little wick for absorption, all right? And keeps going down until big support. Blow off top, big absorption wick, and keeps going down until finding big support, all right? So let's see it once again. Blow off top, a big absorption wick, and then keep ranging down till we find big support, all right? So let's read your absorption zones. That was I looking for. Great. Nice, Thomas. So that is what a DNA analysis is, right? What a fingerprint of an asset is. Basically, how it's behaving over and over and over and over. So those patterns are most likely to have them or being repeated in the future than not repeating them in the future. Why? Because we can see them like a basic structure on their behavior from before. Does that make sense? Let me know, guys. This is a very important concept. This is kind of like one of the basics 101 of what I teach while trading. So, perfect. Great. All right. Now that we understand what is a DNA analysis, let's dive into the micro, more specific DNA analysis, right? Because remember, just like one of my favorite architects usually said, and hopefully I don't see Master Lex G in the room, but he's also an architect and he might be also recalling this one, that when you're trying to resolve a problem, go from the very big problems from the, most common, from the general, right, to the specifics. Because when you start solving specifics, sometimes you get into a loop of mistakes there, and you just get drowned by something that maybe by looking at the majority, all right, or the blob, all right, of the behavior, you could be even just getting rid of most of those specific points, all right? So now that we understand this, let's go and look for that DNA. All right, so what is the DNA, all right, specifics on VET, if it has one? So do we see consistently hitting the 50%, or do we see it consistently not hitting the 50%, all right? So that is an open question. I'm not gonna be answering it. That is your homework if you want to trade on VET using fair value gaps. All right, does that make sense? Therefore, let's just set an example here. Let's just call that most of the cases it doesn't, all right? Let's just say that it doesn't, that we already have done the back testing and we already have gone through a couple of months of trading it and it doesn't make it, all right? So if it doesn't make it through, now I could be looking for a retrace, not all the way down here, in setting my possible long position right before that 50% and also going for my stop loss to the lowest possible sections that I see, all right? So that is a fair gap. So probably I could be setting up my resistance like there. And then what am I missing on a, sorry, not resistance, a stop loss. What else am I missing on that stop loss? I always add something else, guys. Let me know what else do I do just to keep me safe for that possible push down or push up. Alert. Oh, almost there. Wiggle room. There you go. Yes, that is the exact answer that I was looking for. Alerts. That's a good answer. This is a damn good answer. Why? Because I'll be placing my alerts before entering here. But talking specifically to stop loss, I'll be looking for that wiggle room or that volatility section, right? Remember, quick little kind of like a recap. It is on how do I find that volatility? Well, then that volatility, I usually go for the wicks. I do not, right? And let me explain and let me repeat that. I do not go for the biggest one, all right? I go for something that looks average, something like this. Well, then this is a little bit too small, but yeah, kind of. I mean, it's still very short, so let's add a little bit. So that for me kind of adds to average. Would you agree on this being average? Let me know. Your fair value gap, wick size plus a bit exactly. Hey, what happened to the wick finder indicator we were talking about in the summer? Oh, I believe that we haven't. Damn, that's a good one, brother. We haven't pushed that one because we have new releases, but let me bring that back to the, that would be a good one. Yes, and great suggestion, for that, Thomas. So I'm gonna be adding that at the bottom right here, and that's gonna be my stop loss, all right? So that's what I do. That will be my possible entry. This is not an entry that I'm right now looking for, but this is gonna be a possible entry, all right? Now that we understand, all right, do we understand fair value gaps? Yes or no? And brother, let me see if I got you here. Where is it? Chuck, I still had on schedule the MVP also there. Don't worry, we're gonna get there, right? Just don't think that I'm forgetting about you, brother. I got you here. Thank you for your patience. Perfect. All right, let me show you how I use those fair value gaps, all right? I use them when I have nothing else to use. Like for example, yesterday I had my what was it? Do you guys remember what was the tool that was glitching on me? Predictive ranges. Remember that? Yesterday I was looking for predictive ranges and I could not get them on screen, all right? Well then I went for here you go, for order blocks, all right? And order blocks were a little bit too far away. Then I went for fair value gaps, and that's where the question became a thing, right? So what is a fair value gap and how can I use it? So as you can see, we've been taking up to an hour, almost there, with an hour explaining fair value gap. It's a basic concept, but it involves a ton of things, because what kind of instruction will that be, right? Just by explaining what you could be finding on the internet, right? what I want to share with you is how I read it, what is it, right? First of all, what is it? Then how I use it and how it can become to be part of your strategy when you add it to different knowledge or to more knowledge that you already have. All right. So if you feel that I have achieved that a class, let me know and give me the thumbs up here. If you feel that I haven't achieved that, give me also the thumbs up, because that also let me figure out what I might be doing wrong and how can I basically improve. Perfect. Thank you guys. Thank you so much, guys. And let me see. Am I recording it? Please. Yes, I need to be recording it. This is a good class. Let me see. Come on. Oh God. Let me see. Give me just 1 second. I'm gonna be pulling my hair, the little hair that I still have left. Yes, I'm recording the session, guys. This is gonna be uploaded throughout the weekend. All right. So this is gonna be a good one. All right. Moving forward to just the last part of fair value gaps, and then moving to the MVP oscillator. All right. So the last thing of fair value gaps, as you can see, I am burning into my brain how a fair value gap looks like. So I can go back into a lower time frame and remember that I was talking about this being my fair value gap, right? Well then, if I turn on my fair value gap on the 4 hours, of course I'm gonna be having 4-hour fair value gaps, all right? But what about the 12-hour fair value gap? Well, that's what I like a little bit more, all right? I like higher fair value gaps. Therefore, I tend to ignore a little bit the right now on chart fair value gaps, all right? Remember that I can also be changing my fair value gap here, or even adding a multi-time frame fair value gap zone, all right? Which is gonna be acting upon my right now chart, right? So I like to take or have both ways of the coin, right? Two sides of the coin. So first of all, look at here. I have this dashed line, which are indicating me a possible entry for a long entry. Why? Because I have broken them, all right? It's not about the breakout. It's about the retest, and look at where that fair value gap is at, all right? So that's why I'm using that fair value gap as the first side of the coin. So where is my next support and resistance, all right? Now, just to finish up, to be honest, I still don't understand the overall importance of the fair value gap, except that price tends to come back to it. All right, so Thomas, if you know where is the price is going to be coming back to, I mean, if I would have told you, hey brother, we are here and we're gonna be hitting 0.026, would you be taking advantage of that information? Perfect, of course, right? So that is a fair value gap concept, telling you up ahead, where do we have that next possibility? Perfect. So there is a question for you guys, and I want your take on this. All right. So usually we go for green as support and red as a resistance. All right. Usually we tell, right, and this is most likely for support and resistance. All right, but usually we say below the price action, bullish, above the price action, bearish. All right. But fair value gaps, guys, is it magnetic or is it repulsive? Attractive or repulsive? Magnetic. So attractive, right? Magnetic. Perfect. So, and I also see it that way. So if I have, which I don't, of course, because the price is not there, right? I mean, of course that I don't have, but just bear with me. I know this is not technically correct, but just for the purpose of this class, let's just roll with it, all right? Both attractive and repulsive. Dennis, yes, I do agree with that, but I'll say it more attractive than repulsive. But yes, I do see where you're coming from. And that's what I want to kind of like explain right now. Let's just say that maybe I have a fair value gap here that of course needs to come from somewhere else. Maybe a past fair value gap there, all right? I see that I was attracted to this one, all right? And now I'm bouncing. So if this is magnetic, attractive, this means that this one is it. Bullish or bearish? Bullish. Yes. So Now the concepts get inverted. You see that? What before was, if it's above, it's bearish, and when it's below, it's bullish, because of the way that we see the fair value gap acting, it changes what is bearish and what is bullish. Does that make sense? Perfect. Perfect, guys. All right. So that's why we can change those colors easily right here, just so they accommodate for your perspective of the charts. Opposite of support, resistance. Exactly, Dennis. Exactly. Well said there. Well said. All right. So let's roll with the next one. On top of this, I also want to see support resistances, which are repulsive, right? I know support resistance are repulsive. So I will be adding where do I have more things? Also, order blocks are magnetic or are attractive, right? Therefore, I could be also adding support and resistances. Sorry, come on, I just said it, order blocks, right? Order blocks I could be adding on top of those and see if they work together to start pulling or rejecting the price. Does that make sense? Perfect. All right, let's move into the promised oscillator, all right? So let's do a quick analysis using that oscillator. So let me change it right here. Remember, I'm clicking on the gear icon, going to the oscillator select, and then MVP oscillator, right? The first thing that you're gonna be seeing is that we're gonna be having a couple of things happening here. So first of all, we're gonna be seeing this ribbon, all right? This ribbon, it's basically telling you when we're having that change of trend. But on the oscillator, that could be of a benefit, especially when we're having this kinds of bars in here, right? These bars are telling you basically when it's a good moment or when we're having that overextension of that trend, all right? Just so you know, this is a strategy straight from Army Piper. He usually does it on daily and above. When he starts seeing those bars at the bottom, as long as he's got bright bars and we are moving down, he is gonna be DCAing in. Again, not financial advice, I'm just describing his strategy, all right? So how to use it, very simple. And also, oh, are we on the MVP? Yeah, you're talking about this MVP, right? Not the trend fusion, is that correct? Yeah, I believe so, right? Let me go back in here. Chuck, MVP, right? Let me, because I can't find it. Yeah, I found it. Yeah, MVP, perfect. We are on the correct one. All right, so you're also gonna have reversals, all right? So guys, there's a thing with reversals. All right, a reversal, Chuck's gone. He had to go to WC. Don't worry, we're recording this for him. Adds potential conflict, exactly, adds potential conflicts. Chuck, what's up? I'm here. Hey, brother. You were talking about the MVP, right? Not let's go to this. The MVP, not a trend fusion, right? Perfect. All right. Just making sure that I was on the correct one. Perfect. All right. So at this point, I would personally like to add a zero line, all right? Or a 50% line, which is going to be here, zero. Zero will be good, all right? Just for reference. Why? Because I am a little more square-ish person when it comes to trading. Remember, I like geometrics, right? I like to see a vertex. I like to see a channel. I like to see reference, right? Why? I don't know. That's just the way my brain works. So what I like to do is treat it just like the middle ribbon of the oscillator, all right? I will be calling for that trend to be shifting both on the cross on those EMAs that we might be having here. All right, look at that. And then look at when we start having those green bars, as we start going back, for me, past and below that zero line for me, all right? That's when I start looking for possible reversals, all right? Does that make sense? Let me know. Also, look at that we have these triangles. These triangles are also reversals. What is the difference? The difference is the way that they are assembled and also the data that they have. Reversals are meant to show you short-term, immediate, possible zones of reversals. So despite their math, it's extensive and complex, it's specifying you reversal, right? So like that. Sorry for saying that way, but I just want to make sure that it's just reversal, all right? Then the other way around, but also is giving you reversals, It's like the combination of different stuff, all right? So like, for example, we can have right here the trend going down here, all right? So when do we start shifting that trend? We'll start shifting that trend as we start crossing. But we also have those histogram bars that are telling you, look at that, we are overextended, all right? So when we are overextended, that is possible, a great possibility to start jumping in or considering jumping in into a possible trade. All right, that meant that if I see it coming to the dynamic reactor, I already have some of those and I'm below that zero line and possibly making that thick zone. Look at usually after what happens when we have a thick, it goes back and thin, all right? And what happens when we go thinning? We have a little reversal, all right? So I see it very thick. I'm heading to a support. I'm below the zero line and I have those bars. What do you think I'm going to have there? Let me know. A possible reversal, right? Yeah, a possible long in that, a possible bottom, exactly. Remember, our oscillators are, and I'm not saying this because I'm an instructor or work with Tarpon, all right? Our indicators are truly one of the best of the market, all right? If not the best in the market. I could be going out and also trading with anything else. But when I start showing you my personal charts, you'll see that I even try to get rid of everything that I don't use, right? As I always say, less is more, right? And I do stand and I do show, I put my money where my mouth is, right? So this is just a friendly advice, not financial advice, but try to go for the simplest possible scenario and then add a little bit more just to compensate for that maybe oversimplified strategy. That always, it's a good reference for me. So oscillator are great for Confluence, exactly my top to go. So do I. Don't get me wrong, the price action for me is king. That's it, period, right? But the oscillators, adding on top of price action, man, that is just amazing. Default tuning. I usually don't change any of the tunings there. Oh, tuning on what? Sorry, you're talking about the tuning on the Oracle, right? Right here I'm using 60. But this is because of VET at this point, all right? And also because I was going to, it wasn't VET, it was Pyth. Because of Pyth, because we were looking at Pyth, or we were going to look at Pyth. Usually I do. Guys, can you remember me? What is my personal best tuning? And that is for Bitcoin 4 hours, by the way. Oh, you are right. I'm doing it wrong, brother. Thank you for that. Oh, it did not hit it. Should. Yeah. You are correct. Sorry, my bad there. 43, exactly. 43, 45, exactly. Digital, I know. Digital is correct in a way because he's been here for a long time. He has seen me going from multiple instances of Market Oracle, and he has seen how I've been updating and upgrading my settings. Long time ago, it used to be 38. Still 38 on kind of like a traditional market. But yeah, right now it's 43, 45. And extra kudos for Dennis. Brother, great catch there. Great catch. So thank you so much for that. Let's see. And if I go to 43, I bet you we're going to have that one there. Let's wait for that. Oh, we didn't. That's fine. All right. Guys, it's already 10 minutes past it. Let's go over the wrapped up thing. So guys, if you have any questions, please let me know. Also, the reason why I joined was to improve my vision. And I'm reading you MSG. The reason why I joined was to improve my vision with less distraction. Great. There is a guy who has so much on his chart. Isn't like London. Yeah, he's 747 to make a decision. Absolutely. Love that comment. Pretty funny. Simple is the key to improve the ability to snap quick and in out. Thank you so much for that. SMG, extra kudos for you, brother. Thank you for sharing that. OC, please check out what's happening with my account, please. Yes, Thomas, there's something we haven't new updated. I already have sent it to the devs. don't worry, it's gonna be up and running in no time. Usually takes around 5 minutes. Just that I wasn't alive there and I couldn't just keep a tag on that one. But right now, just ending this class, I'm gonna go back to the devs and see to get you up and running ASAP. And don't worry, I'm gonna be adding those days back to your account just for that inconvenience that you have there. So I'm gonna get you set up today. Don't worry, buddy. And Tesla Pilot, what's up? Anytime, brother. ARC, brother, what's up? Long time no see. Clean chart are easier to point out certain things and learn from. Yes, absolutely. You are the best, brother. You are the best, Thomas. So great to have you back, brother. Guys, without further ado, let's roll with what it comes from the bottom of my heart, which is, guys, you are the most important part of Chart Prime. Not only from that, you guys are the most important part of me, or for me, and also the most important part of this class. Remember that I'm trying to share my path, all right, my travel, what I did wrong, what I did right, where I'm standing right now, and also the day on day good things and bad things that I've done, just so you don't have to walk the same path that I did. And also you can have a much easier way around just by not having to, like experience the bad taste of losing right in the markets on your own feet, basically just experiences on somebody else's flesh, right? So we're trying to get you around those sharp edges there of trading, and also, guys, to get you guys to a point where you can fish by yourself, right? So guys, thank you so much for being on today's class. Remember that I'm gonna be waiting for you, and as always, guys, see you guys tomorrow.